What's up guys, and welcome back to Wall Street Millennial. On this channel and podcast, we cover everything related to stocks and investing. Today we're going to go over some of the biggest recent losses on the Wall Street Bets forum so we can learn from other traders' experiences. In the current market environment, it's easy to lose money, and sometimes it can feel like you're the only one losing your shirt. So today we're going to see how some traders are handling their near total losses, and how other people are trying to take advantage of the bear market of the past 6 months. But before we dive in, make sure you're signed up for our daily newsletter at wallstreetmillennial.com/newsletter. We've started a new featured stock section to the newsletter once a week, where we highlight one stock that deserves your attention and why. The newsletter is delivered straight to your email inbox at 5 a.m. every morning of the trading week, and has everything you need to know before taking on the day. All the day's news and market-moving events, expertly analyzed and distilled into a short 3-minute read, so you know the things that matter most for your money. In just a few minutes a day, you can prepare yourself with all the market due diligence that we perform for you. And the best part is, it's completely free. Go to wallstreetmillennial.com/newsletter to put your email on the mailing list and start receiving the newsletter today. First up, we have a Robinhood user who lost more money than you would have thought possible. User Al F King Do It Again is down over $50,000 on an account that was worth less than that much money at the peak. In other words, they lost over 100%. The account is now in a brokerage deficit, requiring immediate action to cover a margin call. A $50,000 loss is definitely a lot, but this might be the first time we've seen an account go to $3,900 into negative territory. You might be thinking, how do you even get a negative account balance on Robinhood? On most stock and option positions, even if you use margin, Robinhood will liquidate your position before your account balance even approaches zero. But there are a number of ways to still end up owing Robinhood money. For example, if you're heavily leveraged into a stock and for some reason the stock gaps down, for example, if they report disastrous earnings and the stock tanks by 50%, Robinhood might not be able to liquidate in time. Another scenario is if you own call options and they expire in the money. Your brokerage may automatically exercise them, purchasing stock at the strike price. Of course, this is actually optimal as you would then immediately sell that stock at a profit, but for a short period of time, your account might show up as negative. Unfortunately, we'll never know how this trader managed to go $4,000 into debt in Robinhood, because when asked for his positions, they just said, sorry, it's all gone. Let's just hope that negative account balance isn't real. Better luck next time. Next up, we have user Arcane Paradise, who made a $3,000 gain, bringing his account from $500 to $135,000, only to lose it all again. He started with about a $16,000 account, which he quickly gambled away to a low of $500 a couple months ago. From there, over the course of many highly leveraged trades, he managed to almost 10x it to a peak of $135,000. However, the highly leveraged mentality that got him there didn't stop, and instead of 10xing again to the millions, he lost it all within a week. That $120,000 gain became a near total loss, and the account is now worth just $660. The first big time gain off the $500 low was a Netflix put right before earnings last April. On that call, Netflix announced disastrous earnings that showed the first subscriber loss for the company in over a decade. The stock lost over a third of its value, causing the OP's puts to print. Over the next couple weeks, he continued buying puts on tech companies, which made a ton of money until the market started rebounding in the last month. Despite the gut-wrenching loss, commenters point out that going from $500 at one point to $135,000 and back down to $660 is still a $160 profit from the low. In percentage terms, that's a 32% gain in just a couple months, better than most traders or even hedge funds for that matter. And since he's done it before, it's fathomable that he may even be able to repeat his bounce off the lows and bring his account back up to the $150,000 range. Good luck on your future trades. Next, we have another massive loss, this time a 99.99% loss that has relegated user Savage to a $2.35 total account value. This Robinhood user has been trading since July of 2020, when many new retail investors were introduced to the world of option trading. He hasn't posted his positions, but from the chart it looks like he was doing fine until the summer of last year. At that point, large option trades likely caused the step changes in account value that eventually took the account all the way down to just $2. Most of the losses happened within the last few weeks. This just goes to show that despite the stock market offering the opportunity to make life-changing profits, getting impatient puts you in danger of losing everything instead. Next is an almost inconceivable loss for user Money Whisperer. This trader is down $140,000 from the all-time high, $100,000 all-time, with $50,000 of it in just 2 weeks. It looks like another case of a previously successful trader discovering options and leverage, and then losing all of their hard-earned gains. Lucky for us, he shared the detailed story of what got him here. He started off in 2021 investing in the Nasdaq QQQ ETF, as well as Jim Cramer COVID recovery stocks like Boeing. While the Jim Cramer stocks did badly, the QQQ position more than made up for those losses. But it turned out that was the best his account would ever do. He decided to dump the Cramer stocks and buy the triple leveraged QQQ ETF to try to make back the gains that he missed out on by not going all in on QQQ from the start. But instead, the Fed started getting more hawkish around that time, and the leveraged position started tanking. This caused his account to go down by 50%. He then tried to make back those losses again, this time by using long-term call options. That worked for a while, but then the Ukraine war triggered the massive spring of 2022 sell-off. And that's when he made his last and greatest mistake. In April, he took the advice of Cramer and went all in on $61,000 of out-of-the-money AMD calls. AMD immediately tanked and he lost another $100,000. Add in a couple more highly leveraged plays on Microsoft stock and his account ended up less than $50,000. Instead of learning from his experience, he is now back into leveraged QQQ, which has actually done decently well over the past month. He's made back about $8,000 of the $140,000 loss. But off a base that's so low compared to where he used to be, he's going to have to take a lot more risk before getting back to his all-time high of $200K. Better luck next time. Next, we have a huge loss on a single option trade on Meta, formerly known as Facebook. User Aftershock Pivot bought $70,000 worth of call options on Meta on June 9th. The calls expire on September 16th, 3 months later, with a strike price of $240. Unfortunately, instead of going up, Meta stock immediately fell another 20%, and since then has remained low. In order to get just to the break-even price of $328 per share, the stock would have to double. Now there's only about a month left, and a 100% gain for Meta in 1 month is all but impossible. That's caused the negative 99.83% on those calls, for a $70,280 loss. But that's not all, because this trader is down almost $150,000 total over the past year. They didn't post the other positions, but they're likely just regular stock positions, because there aren't many huge jumps like you'd see with large option positions. The trajectory over the last year is also very similar to the broader market, with a peak in the fall of 2021. At least he didn't put his entire portfolio in the Meta trade. Better luck next time. Next, we have an incredible, gut-wrenching $150,000 total loss on Netflix calls. Austin Godfather YOLO'd everything into Netflix, only to lose $152,000, or approximately 99.5% of his portfolio value. At the peak, the portfolio was worth over $200,000, so the total peak-to-trough decline is $206,000. Netflix is currently down over 2/3 of its peak value over the past year, due to streaming competition and user declines. While Netflix had been one of the greatest bull stories of the 2010s, as some commenters point out, the company's prospects have progressively been getting worse recently. The reality is that Netflix just isn't in the same category as Google, Amazon, Microsoft, and its other FAANG counterparts anymore. And the key to successful investing is being able to spot the trends of the future, not those of the past. Better luck next time. Alright guys, that wraps it up for this video. What do you think about these losses? Do you have any of your own to share? Let us know in the comments section below. Also, don't forget to sign up for our daily Wall Street Millennial business and finance email newsletter at wallstreetmillennial.com/newsletter. In the meantime, thank you so much for watching and we'll see you in the next video. Wall Street Millennial, signing out.